All right, welcome back to Dominating Your Investments. Dom Rinaldi here. I have a cast of friends. We are going to talk stocks tonight, and everyone's caffeined up and ready to go. I got Chris Patel here. I got Shabari. I got Jake, and they're going to do little introductions of themselves and kind of their history on investing really quick. And then we're going to jump in and we're going to talk about the current market conditions, really kind of just dialogue about what's going on. What do we think long term? How does this impact our investing? And I promise the guests will do more speaking than I will. I remember the last interview I did with Aisha. A lot of comments there on the YouTube channel. So, Chris, why don't you kick us off a little bit about yourself?
Sure, Dom. So I'm in healthcare IT, do a lot of implementation work, specifically in sector of radiology. It's a great experience. I have a clinical background, and IT is kind of a little bit new thing to me, but at the same time, it's always really good to see how everything kind of integrates into your modern healthcare system. And based on my investing, I've been investing for the last 10 years. I've been mostly into growth and tech stocks that have done predominantly well. I'm trying changing up my investment philosophy a little bit from going into just looking for value based on numbers to instead looking on disruptive technology that can change the future. Because I think if you really try to make money, you have to find those things that other people can't see or that refuse to see it because all they're looking at is quarterly reports.
Oh, well said. Shabari, why don't you go next?
All right, man. Well, for me, I pretty much just started. Well, my investment journey started off doing just index stuff, just because I didn't understand what the hell I was doing. But everything scaled up after I started investing in Tesla. So since then, things have obviously looked up. I've been waiting for Palantir to hit the direct listing, or I think they were they were about to IPO at sometime in 2016, but I was waiting for them to come out. My philosophy changed when I really wanted to improve myself and my skill set. And then I was like, you know what? I'm just going to start investing in companies that I actually want to work at. And for me at that time, it was literally just Tesla and Palantir. So got in a direct listing for Palantir for the most part. I've been buying ever since, really. But that's pretty much it. And here I am.
Awesome. Jake.
Yeah, Jake Urey. I'm a former Air Force firefighter turned fire inspector in the civilian world. First really investment was in Tesla after kind of passively investing through work and in the military kind of version of the 401k. I realized with Tesla that I can kind of take control of this. I can do it myself. And like Chris said, kind of looking at what kind of an edge that companies have apart from the numbers that kind of retail might have an advantage in identifying early on. And I saw that in Palantir in late 2020, invested and been pretty heavily invested, pretty concentrated. Tesla and Palantir probably make up more than 90% of my portfolio, with the rest, some more what I would call speculative. Other people would call diversifying, but I guess I call diversifying. I think that's a Peter Lynch term, but yeah, mostly Tesla, Palantir, looking for the growth, those growth companies that have something kind of mimetic and some technological advantages.
Awesome. So you've all heard it here. We're all in our 30s. We're all looking to invest for the long term for the most part and interested in technologies, innovation, and we value company culture, as you heard Shabari saying. I'd only want to work there, and I would second that. Right, that adds when if you would actually go work there, then why wouldn't you invest in a company like that?
Yeah.
So we'll start with just open forum on the current markets. Like, what are you guys feeling, thinking? We're all seeing it on Twitter. Just how do you handle this, and what's kind of going through your guys' minds right now?
I know for me, whenever I'm like all the guys in my comments are basically out of money. they bought all these dips so far. That's me too. Like I have a tax bill coming up, so I'm sitting on cash. But if I start spending that, then I think jail time is due for me. So I think I'll stay away from that and hold. I think what I'm doing now is really just staying in cash a little bit. It's a little more. I don't know. For me, it's more comforting just because I know it's there and it's not in some sort of like tanking asset or something. But I'm sure you guys have other strategies. But I know from my viewers, if you guys are watching, I know you guys are broke as hell, man. So, just keep holding on to what you got and we'll go forward.
I'm just building up my position now. All I'm doing is just anytime I get any extra money, I've just been saving up, saving up. I don't think the bloodletting has calmed down yet. I think we've still got a few more quarters to go, mainly because there's a lot of rotation from growth to value, based on a lot of the talking heads on CNBC and everything else. And what's interesting though, and what's actually good for the rest of us, is that they're dumping names that are still growing really fast. These companies are not going anywhere.
true.
A lot of people think that, hey, you know what, Zoom was like a big thing yesteryear because of COVID, but it's like, no, you're talking about a company who's revolutionized the video teleconferencing. There's so many companies that are getting oversold right now, and so I wouldn't necessarily not be invested, but I would take small dips in. But right now, my biggest thing is just finding those companies that are being sold off really cheap and making sure that I'm ready with dry powder when the market starts to make that rotation back into growth again. Because value is only going to last you as long as this inflation number comes up high. And I think inflation right now is completely due to supply chain issues and the labor shortage. A lot of that was directly related to all the policies that the government came up with during COVID, whether it was the money printing, whether it was the moratorium on housing and rents, and it was a necessary thing. So I think we're just dealing with the hangover, but at the same time, a lot of people have oversold, and I never thought I could see CrowdStrike at where it is right now, or see Limited, considering how fast they're growing, how amazing their products are, right? And I personally use some of this stuff. So it's crazy to see those companies where they are right now. And I think anyone that doesn't necessarily get in about 5 years, you'll be asking yourself, like, man, that dip, I should have really got in. The other thing that I do want to say, and I think this is one thing that I've changed in my investment philosophy, is that I think sometimes you feel bad, like, man, I feel like a bag holder because I got in at a higher price. Dude, if Palantir jumps to $200 in 5 years, what difference does it make whether you bought it at 15 or 25? Really, honestly, like, if your target and if you're thinking that this company is going to be worth a crap ton of money in the future, don't let the pennies that you see right now deter you. Like, I still remember when Tesla was fluctuating between 45 and 20. Some people were like, oh my God, I lost half my money. No, you didn't, because now 10 years later, $100 price swing up and down isn't even like, yeah, okay, whatever. It's just 2%. Doesn't make a difference. So it's all relative compared to what you're looking for. And I think if you really believe in the company and you think it's going to go parabolic in 10 years, then don't be afraid to overpay a little bit now, because the opportunity cost of not being in it could be much, much higher. There's always been times where I've been like, man, I should have bought that Tesla. Maybe I'll wait until it goes down a little bit. Man, I'll wait till it goes down a little bit further, right? And so I never pulled the trigger because I'm always waiting for it to go down to the point where I feel comfortable buying it, right? And that trigger never came. And now I'm like, man, I should have. So sometimes I'm like, even now, I have a couple of shares of Tesla. I'll be straight with you guys, but I'm like, man, am I overpaying for this company? But that's the position I'm actually doing well on.
The rest, funny, Chris, you remind me of a friend of mine. This guy, he was like, when the iPhone first came out, right? He was like the one guy he was like, man, I love this thing. And when it came out, he never bought it, right? And he waited till like iPhone 7 to buy it. I'm like, dude, you could have had like 6 of them till now, right? And then he's like, but I don't want. Now he regrets not buying it in the beginning, because he was like, back then he could have got it no problem for the first one, right? So it's just funny you mentioned it that way. But I think half the issue that you're talking about and all this frantic behavior is mainly because there's so many new people in the market now, right? I know me, for example, like I was trading with all the free platform and software, and I was just doing my own research, right? But now there's so much information available just from people like you, Dom, and all of us here, and people like Tom Nash and all these other guys on YouTube, that to a point where there's so much information, you got to process it. Plus, there's so many apps that you can get into to get into the market, right? Money has never been easier to invest now, in my opinion. So I know, especially from my comments, there's like, it's either like a bunch of kids or like a bunch of old people, and most of them are just they're like, oh no, what's happening, how come it dropped like 5%? Like, dude, relax, it's okay. look at the big picture, right? Don't follow this like whole quarterly, Wall Street type of like thing, because again, we're not Wall Street. We're trying to look at the 100-foot picture here, right? So
So
yeah,
I'll make
totally
two
agree.
comments on what you guys said, and then want to pass to Jake to make sure you get his comments on the market as
Yeah.
well. Just a quick comment to what you said. I think you hit on something we all struggle with, Chris. I know for me, I struggle with that. I remember just a couple days ago, Nvidia went down to 276. And I said, "Yep, I'm doing it. I don't care. I'm not gonna penny pinch anymore." And also, like the next day, it went down to 260, and I'm like, "Are you kidding me?" But the reality is, I feel, in my opinion, once again, all of this, guys, is not financial advice. We're not telling you to buy, sell, or anything. We're just speaking our minds about the market, so you can take with it what you will. But I believe it's going to be a $2 trillion market company in a couple of years. And so whether it's 260 or 276, does it really matter? Or Palantir at 25 or 15, right? My base cost basis now I think is down to like 20 because I had a lot above that. But does it really matter? And I think
Right.
the thing that we have an advantage for ourselves is we're retail investors, we're young, we're looking for the long term, and we're willing to sit through volatility. Now, a lot of people say they're willing to, but then you got to do it. And that's what we're doing right now. Right. So for me personally, I'm fully 100% invested. And so with that, I feel less stressed. For me personally, I was more stressed having cash on the side, being like, oh,
Okay.
maybe now it's the lowest price. Oh, wait, I'm gonna wait one more day, And these dips happen so quick that I think we saw a statistic out there that like if you were to miss the most opportunistic 30 days out of like a 3-year period, the difference is like crazy in the returns.
Yeah.
So that's the advantage of being fully invested. You just ride it out. Jake, I want to hear your take on just the market, how you handle it. Just yeah.
Yeah, I was in some margin a little while ago, and when the Fed started talking about tightening, I did sell to just get out of margin to kind of see how it played out. I ended up making some gains off of that. I wasn't selling at a loss, but just to kind of hedge. And I'm willing to lose my own money, but I'm not willing to get a margin call. So I was trying to avoid that. And then when we got pretty low, I'm just trying to be patient. I sold some puts with having some cash in kind of an emergency fund I was willing to pour in. And I think things kind of got a little euphoric today when CPI came out, and that it almost makes me nervous. Like we could keep ripping higher in the market in general, but it's almost like those inflation numbers, they were right at expectations, and it was like the market was just happy to take whatever it could
Mhm.
get and run with it. And I feel like it wouldn't take much to go the other way in this environment. As soon as we hear something that the Fed won't like, that QT will be back on the table and the market will go right back down. So I'm playing it safe, and I'm not rushing to get back into too much margin.
Yeah.
Yeah.
So maybe if you could just define margin for our audience. So we're talking about options here. So I don't do options, don't understand it enough. Definitely would encourage people to get educated on it. I know, Jake, you said you took a lot of time figuring that out and before you jumped in. So maybe you just explain to our audience what you're talking about there with margin and puts and that.
Most of the margin that I actually use is just in buying shares, and I usually only buy shares on margin in Tesla. Being in the S&P 500, and as a company, it really does have a backstop because it does have some pretty substantial earnings, and it is growing. And as you can see with something like maybe Palantir or growth companies that haven't really turned to gap profitable, they can have a much sharper downturn, and your broker, they can raise that margin requirement on you, on a dime. So I wouldn't lean too much on that if you're just starting out, if you don't have a lot of reserves, an emergency fund. But mostly, most of the margin that I use, it's a very small percentage, 5 to 10% of my portfolio. max, if I'm really confident. But I don't like to play options on too much margin. I don't like to play options around earnings, especially speculative growth stocks. I mean, you never know how the market's going to take earnings. You never know how the market's going to take these like macro events. Every time Jay Powell gets up to speak,
everyone's waiting for each individual word of what he says.
Yeah. So it's typically I buy enough to write it for 6 months without overextending myself on how much I've borrowed from my broker. That's typically what I do. Yeah. And then if I sell puts, I'll have enough money standing by to, they're cash secured. If they're not in my brokerage account, they're in my savings account, and I can deploy that very quickly.
Mm-hmm.
So with doing options, you have yourself covered. You know what you're willing to lose. You're not being reckless, right? Because to Shabari's point, there's a lot of younger investors who have really put themselves in negative situations, YOLOing life on options. Not to say there hasn't been people that have gotten Lambos and they're doing well, but that's not the way to really live and think that you're not going to get bit with the risk eventually.
No, for sure. Yeah.
So
the thing with options is that, options can save you, but they can also destroy you. And that's the key that you have to remember when it comes to anything that you invest in. Options are one of those ways where if you really understand the mechanics, you understand how they affect a certain stock, you can do very well on it. There's definitely ways to do it. But I think for me, I use options, but I use them as protection because that's what you can do, right? If there are certain stocks that, you feel like, hey, you know what? The chances of it going up are high, but also the chances are high going down. You can buy some insurance on it, right? So it's one of those things where it can give you a little bit of comfort to know that you're not going to get put into a position where you're going to lose half your money, but you may have to buy something that'll hold you over for a little bit. So options are a great tool as an insurance against things, but you really, really have to learn about the mechanics and how they work. There are professional options traders out there that you will never beat because guess what? They have access and the ability to trade faster and get all these arbitrage opportunities. So I don't try to compete against option traders. Option traders literally have computer screens full of information. They have algorithms built in different platforms that automatically, when they see that the price of something goes higher in terms of like option volatility and that the chances of making money have diminished significantly, the computer will auto execute against you. And literally the chance that they'll make money goes to like 99%, and the chance that you make money goes to 1%. So going against algos and that is just not worth it, in my opinion. So I think the best thing you could do is, invest for the future, buy companies, buy the stock. If you don't know anything about options, don't do it. And to Yuri's point, I was going to say, same thing with margin, right? Margin is one of those things that can really build you up because it can juice up your returns. Because what you're essentially doing when you're doing margin is that you're using the stock that you own as collateral to buy other things, right? Now, the thing is, though, when you have collateral and the value of that collateral goes down, now you're in a position where you owe more than what you originally borrowed, right? Based on that collateral. So now the brokers will jump on you and say, hey, listen, either you post more collateral in the form of giving us more money, or we will sell your position right away. And the biggest problem that I've seen with people is that you incur a lot of issues when you incur those losses, right? That you can't even carry forward because you can't even buy back in until like way later. So just from a mechanics point of view, you need to be very careful with how you deal with it. But like Jake said, I think if you're doing like 5-10% in margin, you're fine because there's not enough of collateral depreciation for you to get a margin call. Like literally whatever stock that you bought has to go down like 80% to get a margin call on it. The problem is that if you are leveraged up to the point where, like 80% of the collateral is borrowed against, and all of a sudden your broker,
That's
whether the
gambling.
stock price is up or yeah, that's
That's
gambling.
gambling at that point. That's a
Yeah.
gambler's dilemma. Shabari,
And you,
oh, go ahead.
yeah, and you could, like I said, it's like going to the casino and saying, "Hey, can I borrow some money?"
Yeah,
The
yeah.
casino will never say no to you.
Yeah.
It's the same way with margins. I would say to any retail investors, try not to get into the habit of using too much margin. If you do use margin, use a little bit to kind of like juice up your returns, or to buy something that to use it as a way to buy something in the future, which you were already planning on allocating. You
Yeah,
know, if my goal is from 6 months from now, I want to buy Palantir at 15. I mean, I want to buy Palantir 6 months from now, and I have like, that, but I don't have the cash on me, but I have all this extra collateral in my portfolio. Yeah, I could use margin to buy it, but I was going to buy it in 6 months. So why not buy it when the opportunity is there? Right. So that's the way that I think of margin, which is like, hey, this is something that I'm going to do in the future anyway. So I'm not like regretting it.
Okay.
Go ahead. Yeah.
So Shabari, do you also play with options or margin or any of that?
Yeah, I did 2 options kind of spreads last year. It came out okay. It was mainly in Microsoft, but I had no idea what the hell I was doing, so I would not suggest it. I'm currently in the process of like learning a little bit more. I have a general understanding as to what I'm doing in terms of like a simplistic sense, like how to buy call options, that kind of stuff. But there's that whole wheelhouse of doing the spread where you do the call and then a few puts or whatever the case is, right? So I'm still trying to learn on that. But eventually maybe I'll sell some put options for like Tesla or something, or cash cover puts or something. Probably next year though, because I don't trust 2022. But for just to finish off on the margin point, one thing I know for me, I had no idea what the hell I was doing. Like for the margin, I had no idea. I got margin called at least like 6 times. But the thing is, one thing I learned is depending on your broker, there's like so whatever stock you're trying to buy, there's a percentage that they're allowing you to like margin on. So for instance, if it's Tesla, from my brokerage, it's like 50%. So if you want to buy on margin, you have to, as long as you have 50% of it, you're good to go, right? And then in other places, another one I have, it also depends on buying power. So it might be a percentage, but then if your buying power is higher, then it reduces. So that kind of stuff too. So if those of you guys who don't know, just keep an eye on that. Read up on the stuff your brokerage talks about.
And it's addicting too when you get approved for margin.
Yeah.
And you see your buying power, and it's
Oh,
like,
it goes up, eh?
yeah, that's half of the value of my portfolio. And
Yeah.
and then if you think FOMO is bad normally, just think like, man, I almost bought that on margin and then it ran up. So I mean, it can get really dangerous. And I caution people against it. And like I always sleep better when I'm not on margin.
Yes,
When
me too. Me too.
I sleep like a baby, but if I'm on margin and I hear something crazy's going on in the market and I'm at work and I can't check my portfolio, I'm just like, oh my gosh, what am I doing? I gotta sell something.
Just live on the edge, man.
This is a perfect transition because I never thought, honestly, that we would be at the point we're at with Palantir at $16 a share. I really thought when we hit 19, we were pretty much at the bottom. We'll talk about why we like the stock, the company in general here in a second, but it's unpredictable, right? We're in unpredictable waters right now. I think we can sum up the market conditions with, we don't know what's going to happen next, right? It's very fragile. I would describe it as just a very fragile, volatile time. So for those, who are worried, it's not a loss until you sell it, right? So if you can afford to just hold on and trust that the stock market goes like this all the way up to the right, you will do just fine and you'll sleep just good, unless you're on margin. But yeah, let's just start with Palantir, and I want to start this time with Shabari. I know you come at it from a different angle, from a technical expertise, and a lot of your videos are around the technology and competitors and what you've seen and what makes them special. So I would just maybe like to hear your take on that, because I think it's a unique flavor I haven't seen before on YouTube.
Yeah. I mean, to be honest, like I'll try to keep it as cut and dry as possible, because it really is. when it comes to a company like Palantir, a lot of folks don't understand it. Doesn't mean I do either. I'm just coming at it from an angle that's coming from an engineer side of things, right? The thing is with Palantir, because it's a little bit murky, and some of it isn't, right? Their YouTube content is pushing out. They have some good stuff, promotional content, and all this stuff. And they actually preview, unlike a lot of other companies, they actually, and you would know, Dom, right? Like you're in marketing and stuff, you've seen it before. A lot of companies, when they put out content, it's very staged, or it's some kind of like a weird demo or whatever. But when Palantir pushes out any clips, it's their actual product, right? So you can get a good glimpse. And if you've either built or worked in that kind of ecosystem, you can see what they're kind of do just from a small feature perspective. Of course, you won't know 100%, but it gives you a good glimpse as to like a window into the potential feature set that they're presenting, right? And the thing is, there's a lot of misconceptions around Palantir, but the thing is, half of it I think is mainly just driven by the fact that people are looking at it from the lens of other companies, right? So you can't. The reason why I'm bullish on it is just because of the fact that it's not exactly, they're following a completely unique business model, to a point where people are calling it a consultancy or whatever, right? Which is just ridiculous, right? And we all know that, but it just sounds funny. So that's why I'm trying to demystify some of that stuff. But from a technical angle, they're addressing problems that we actually have, we're not even like anticipating right now. A lot of their offerings are sort of like big and bulky, right? But they operate in a complete sort of high efficiency mode. Anything like that in the market that's a massive monolith of a product is like a huge undertaking to onboard. It's a huge undertaking to start integrating with your developers and your engineers on your side. Like you're talking like at least 2 quarters of just integration work, right? Whereas Palantir is like, yeah, you know what? We'll send one guy. It'll give us like 6 weeks and you're good to go, right? So it's like it's people just don't realize that. They think it's just a stonk, and stonks always go up, and they kind of get into it. But especially with this company, I would encourage people to look into their videos. Forget like any of ours. Look into their videos. If you have any sort of tech background, you'll be able to see it. If not, then feel free to look at some of our videos and get some background. But just do research is what I'm saying, right? So like the more you do research with Palantir, the better position you'll be, and the more you'll understand it. Because even to this point, a lot of folks don't fully get the company, and I get it. It's their commercial side of it is fairly new, but as we progress, we'll definitely get more and more info. As we move on.
Oh, that was very, very well said. We'll go to Jake next, then go to Chris, because I want to hear everyone's take on this. So Jake, I know that things started with Tesla with you, and you noticed there were some similar business models or leadership and qualities of those two companies. Maybe you can just share not only just why you invest, but what excites you now, right? We're sitting at 1646, something like that in after hours. What excites you now about the company and leaves you unshaken?
Yeah, I think the definitely the leadership's willingness to really push forward with not necessarily what the customer wants, but what they don't know, they don't know what they want. That's very similar with most really innovative companies. That if you're listening to your customer tell you, hey, can you build this for me, or I want this or that, you're probably not going to have the most successful product. And Carp says all the time, we're building products 5 years before the industry knows they need them. They were talking about pandemics, 5-6 years ago. You go watch videos on YouTube of Palantir talking about contact tracing and things like that for pandemics, or working with vaccines for distribution a long time ago, because they as a company they realize that issues with siloed data and disparate data sources are only going to get harder. And I think seeing them keep like doubling down, pressing forward with really developing solutions and making them more and more scalable. I mean, people. That's one of the big criticisms of Palantir is it's not going to scale. It's a consultancy type of company. Well, they have really good margins for a consultancy company, and that's only going to get better. So the more automatic they make things with integrating more small, medium-sized businesses, and integrating even those larger businesses with maybe just one engineer, the better those margins are going to get. And Apollo and HyperAuto really pushing that forward is like, I mean, people have no idea how big this can get. And granted, the best product does not always win, but I'd rather focus on the company with the best product and the best aims, the best goals. Their growth disappointed, I think, last quarter, but if you look at their U.S. commercial growth, it's up around 100% for the last like 3 or 4 quarters. That's gonna really, push their growth in the future. And yeah, so that scalability and those margins, I mean, I'm just blown away by, what people are missing about Palantir.
So two so far we've heard speak that the market doesn't understand the company. A lot of people say they can't figure out the company. So they make enough information out there for you to figure it out. So I think we can all agree on that. Chris, what is your take on the company?
So, as someone has dealt with in the past in working with management to do procurement, to do all sorts of things, I can tell you the current system is ripe for disruption. We've got so many softwares that are not exactly purpose built. And literally, if they are, they're cookie cutter. So, like, it's just like a one size fits all kind of situation. You won't believe how many legacy technologies are still being used by commercial clients that, they were something that they used almost 20 years ago. But what happened is one of the bigger companies bought them, integrated into their software stack, and said, "Here you go. Now you have a new product." And it's like, no, you're just taking a whole bunch of products from 20 years ago, putting them together and saying, "Here you go. This is a new product." And no, it's like, I don't know if you guys ever saw the Big Short with the seafood stew. So that's the thing. They're just taking old stuff, recycling it, and giving it back to you, saying we have this great new product. And what I like about Palantir is they're saying, no, we're not going to do that. We're not going to repackage shit. We're going to actually figure out a way to make everything interoperable, but then also at the same time let you as the user become a data analyst and actually work on actually operationalizing everything that you're seeing. And I know that sounds weird, but it's almost like you want to have things that are more plug and play, where you don't have to hire a team of data scientists to give you information. I'll give you one example of something that I used to work in. I used to work in procurement in radiology. I was filling in for somebody at the hospital where I was. And I remember when I first started, I was like, okay, what's my budget for the year? Like, if I'm going to be ordering all these things, what's my budget? And they said to me, well, we don't know. Just order it. And, if it gets rejected, that's your budget. That's how you know. And I was like, there's no way. Like, you got to you got to tell me like how much money I have. They're like, well, it'd be too complicated to figure that out. There's too much information. I said, so what's the point of this system, this software that you have that I'm supposed to be ordering stuff from, if you can't even tell me what I'm, how much money I have to spend? So that was problem number one. And then like a week later, I'm like, okay, well, I need to order some stuff. And I log into the system, and there's something called a catalog item and a special request. So catalog items are things that you've already negotiated pricing for, and you're going to order it on the system. And it's very easy. You click on it, and then it gets ordered, and then it automatically goes to a vendor. The vendor sends a product to you. Lo and behold, the person who actually put all this stuff in there didn't know what the hell they were doing. So anytime you would order something, it would come in wrong. The wrong product will come in. You would think that. And you won't believe, a lot of people think that like when you're working in procurement, it's like Amazon, where you just go to it and the product that you ordered is actually the product that shows up. I can tell you, especially in the medical field, that is not how it is sometimes. And it's weird because some of the devices and some of the products that you order are so similar, but at the same time, the smallest thing can provide a vast level of difference. And so I still remember I hated that stupid thing. And I was like, after about a month, I was like, I'm not doing this. You got to hire someone. I'm not filling in for this anymore. That's how frustrated I got. I tried to do everything I could to analyze a lot of their data to come up with, okay, you know what, maybe I'll create my own budget based on last year, what they ended up ordering. And literally, I had to reach out to 10 different people. They ended up having to go to like the data warehouse and they just sent me the spreadsheet with like every cost center we had. And I was like, there's no way that like I can filter through all this stuff. And that's the key. So I see Palantir saying, you know what, we're going to build something where everyone can become really good at their job, right? We're going to give them that information at the ground level, so you can have someone who's filling in a role and let them ended up becoming almost like a data analyst. You don't have to rely on a team of people building things just to get one piece of information to let you do your job. If Palantir has figured out a way to just make that easier, that's huge and that's really disruptive. I don't know if you guys have ever had to deal with
Oh yeah,
procurement,
I was
but it's a
laughing.
pain. But it's a pain, dude. It's a pain.
Yeah, no, that's why I was laughing, and I think we've all hit on some key fundamentals. I'll kind of summarize it in some bullet points, and we'll jump into this presentation on HyperAuto really quick. Um, Data is not getting used effectively in the industry. We can all agree on that, especially in the enterprise. There's so much data growing, and it's only going to continue to exponentially grow in the next couple of years and continue on. So, as Jacob hit earlier, the problem will only compound. And so they're trying to solve this, and without having, as you both said, a team of developers and data scientists and everything else. But what they are actually providing is a no code, or in some cases, low code solution that is point click, that Janine in accounting, who's never done any development at all, can actually use this platform to make informed decisions on her purchase orders, on her budget, and see in a digital twin a simulation of, if I make these decisions, then all of a sudden this is the repercussions that are going to happen for the entire business, and this is how it impacts sales, our executives, all the different departments, right? Manufacturing. And so um, what that is selling time to value, because everybody in every industry, profit, nonprofit, government, needs time to value. And we live in such a fast-paced world where data is growing faster, demands are growing faster than what we can keep up with. We don't even have enough cybersecurity experts or data scientists and AI scientists to support the needs and requests and demands that are out there today. Hence why robotic process automation and AI is so on demand, right? How do we automate this? How do we make it simpler? And so they've foreseen these problems, as you were saying, and now they're modularizing it, right? Oh, there's a problem for ERP and CRM systems. So we're going to talk about that here in a second with HyperAuto. There's carbon footprint. Everyone's complaining about going green, and how do I prove it? Then there's manufacturing and supply chain and actual shipyards, which they just signed the big deal with Hyundai, and moving into South Korea. And then, of course, there's therapeutics and biotech, which is a massive industry for disruption when you think about 90% of drugs fail, right? The drug discovery process is not efficient. So all great commentary. And I think you guys hit on a lot of good points. So I wanted to get your guys' take on HyperAuto. Have any of you guys looked at HyperAuto at all, and some of the literature that they have?
Yeah, I mean, my deep dive into HyperAuto, basically it's something that they understood that they were sending a bunch of people having to do all this work just to get on a company onboarded onto Foundry. They said, you know what, we can actually consolidate this. We don't need to keep sending deployed engineers to do this. It's just not scalable. So how are you going to make something more scalable? Well, this is the way. You have an automated process that you can just kind of put in, and the system will recognize all this stuff based on the ERP or CRM that they've worked on in the past. So when you do all that stuff, yes, the initial part in terms of doing the development may be a little rough, and there's probably took some time, but they figured it out. And now if a company wants to be onboarded, it doesn't take 5 engineers in 3 months. It just takes one weekend with one engineer. At least that's what I understood.
Yep, you're spot on. And the other piece to that is Apollo, and maybe Jake, you can talk on this, is making it easier to do that deployment, to do those updates. So they are having this faster time to value. Because the big hangup was it takes 6 months for Palantir to be deployed, for it engineers, everything else. That changed about, like, I don't know, almost a year ago, right now with Apollo's release and everything else. And we're seeing use cases, which we'll actually walk through here, where companies are saving millions of dollars within weeks. Weeks. I don't know companies that can claim that and back it up with an actual proof of ROI within that short amount of time. Jake, what's your experience with HyperAuto and kind of what you've seen and researched on it?
Yeah, very similar to Chris. When the engineers spoke about it when they released it, it was they kept seeing the same CRM and ERP software over and over again, and rather than and kind of onboarding new clients and kind of hand jamming the same programs onto Foundry, they developed HyperAuto to do it automatically. And so it just kind of accelerates the onboarding process for them, alleviates some of the manpower that goes into that, and reduces gross margin. It's basically the biggest takeaway from HyperAuto. And you know what, it'll only get better as they improve those kinds of capabilities too. I mean, they've proved that they can pivot very quickly. They can develop these types of things very quickly. I mean, since the DPO, they've come out with Apollo for Edge AI, HyperAuto, Foundry for crypto. And so as they are introduced to a wider array of CRM programs, it'll just be like this vacuum of incorporating them together into a larger ontology for any company they come across.
No, you're nailed it, right? And keep going back to the things of time to value. And Shabari, you can comment on this of what it's like in your shoes as a developer in DevOps, to explain to the audience what time to value does for a developer, or even just the business outcome on a project that's budgeted. What does that do? What are the discussions there when a negotiation on an app is? We need this in 10 weeks, right? Here's the budget.
Yeah. Time is huge, especially when you get down to the developer side of it. You're passing like so much stuff, right? You're going through the business process, you're going through procurement, you're going through any provisioning, all that stuff, and then it gets down to the technical level. So I think the value is even before the dev side. Like the way they onboard, it's almost like you're skipping steps a little bit, right? So then when you finally get to it, you don't even need any extra integration work. Typically, when you get these kind of projects in scope, you sit in like meeting rooms with the other, for example, if you get a company come in, you sit in with their lead engineer or whoever, and you kind of, it's almost like a like a like one of those like good cop bad cop type routines where you're like, okay, what can you do? And they're like, kind of this, kind of that. It's very vague. But then when you finally get into it, you're mostly like 2-3 weeks in, you're finally talking about APIs. There's like so much manual work. And then that's part of the reason why it takes so long for you to onboard software. It's not that the software itself sucks. It's just the what you need for these things to get going. It's like you need a lot of hand holding, right? And part of that is because, and this is another thing, right? Part of that is because all these companies, their competitors and so-called competitors, are making software that is very narrow. Like they're like, okay, what is the most common problem in the industry? So if it's CRM, what is the most common problem that we can address with a CRM solution? Okay, now let's attack that. Of course, every different company will have different types of solutions, and they'll share that problem, but they'll have other small nuances, right? And that's where this professional services and consulting side comes in, and that's where the other companies make money. Whereas Palantir is like, you know what, screw it, we're just going to give you an entirely fully built, feature complete product. Do with it what you will. It's totally, like it skips so many steps that you don't need to worry about the developers and the integration as much as you think you do, to a point where you can get it running. And the decisions that actually at the end of all of this is just somebody making a decision, right? That's the thing that gets lost in all of these conversations. At the end of this whole process, someone's actually sitting there and using all of these pipeline related data content to actually make and execute some kind of a decision. For some companies, this decision could be life and death, like if it is healthcare, right? So at the end of the day, like all of this time is wasted on salary, it's wasted on operational costs, it's wasted on so many different things. So it's not just a matter of time, it's more so like time, money. There's so many things come into play. So by them offering such a feature rich and complete product, you're skipping so many steps. The person who's actually getting the the final sort of step is able to make that decision pretty confidently, actually, because you're getting quality content, quality insights, and all this stuff coming down. And on top of that, you're saving so much time. It's almost like a dream come true, right? If you really, maybe that's why sometimes people are like, "What? That can't be real," right? So, but yeah, from a technical perspective, it's easy. We don't want to do this. It in a way, it's like, you people are like, "Oh, it's going to take our jobs." No, no, no. It's going to make it easier, right? Because the reality of it is, you don't want to be writing integrations. Then what you're doing is you're basically just making yourself more fireable. Because half the time when you make these integrations and stuff, they switch up an API on your or version on you once, and then you have to go back to this process all over again, right? Then it becomes who proposed the software, who wrote the API, or are they still in the company? And there's so much operational and maintenance work. It's just it's not it's pointless. It's very antiquated. This is the new way of doing it. They come and they integrate, and you basically work within their sort of like workspace and optimize from there. So yeah, low code, no code is the way to go.
Yep. And it's an industry that is going, the projections are extremely high for the growth rate for low code, no code. There's companies out there who do, like you said, very specific niche, low code, no code type of things out there. But what this is an operating system. This is touching every part of your business, like you guys said. So let's explore how they've modularized. Is my screen sharing here? Can you see the HyperAuto screen? Perfect.
Yep.
Yeah.
So they're modularizing Foundry, which is their commercial product for anyone who doesn't know, and they're solving specific problems that are of large scale, that are critical, and that will be able to be modularized to say, hey, here's your solution for solving CRM and ERP solutions and unification of those data systems, right? And then you're allowed to build on top of this operating system, so you can then, all your stuff you have now is not in vain. You can utilize what you have, but it's unifying them. So this is their description of Palantir Hyper Auto. You actually can download the white paper once you sign up as a potential customer. ERP and CRM systems are the central pillars of many business data architectures, spanning companies of all sizes, industries, and geographies. So we kind of talked about this, right? This is a platform that is the core part of every business. Almost every business now has a CRM, customer relationship management tool, to keep track of their customers, orders, order processing, which Chris talked about earlier. And then we talk about the ERP systems, which are the software systems that are the function of the business. Shabari, you just talked about this. Moreover, real world business decisions often require ERP and CRM data to be integrated either with each other or with data outside these systems. This again requires labor and time intensive work if it can be done at all, right? So they're laying out the problem here. So then we move forward, and now they're talking about how is it powered? Well, it's powered by the software defined data integration. The SDDI is their technology. It's a solution that connects to and integrates the data from ERP and CRM systems automatically. That's the key word. Automatically. Automation. Think automation, lower cost, faster decisions, enabling insights in hours, not months. Once integrated, end users from across the organization can utilize ERP and CRM data to power custom workflows and analytics. Best of all, the solution enables seamless write back, feeding operational insights back into the underlying systems to power more impact. That's exactly what Jake said. Jake said, I can understand the business and the workflows and how this impacts it all, right? And then we see here they're talking about specifically different versions of HyperAuto for different CRMs. So not only have they made this for the CRM integrations, but they have it for Salesforce, they have it for SAP in this example. And then they walk through I'm not going to go through all this, but they walk through their data principles and what their thought process is in solving this problem. And as Shabari pointed out, they're analyzing what's always been done. And now they're saying, okay, how do we do this differently? and give everyone what they need, right? And to not need to hire a Deloitte or another consulting company to come actually get it done. And so they talk through the SAP specific version. And then I wanted to just show really quickly the business outcomes, right? Like at the end of the day, when you're selling in enterprise sales, what are you selling to an IT team or a CEO or CIO? Increased speed and efficiency, integrated technical functionality, and critical transparency and security. So it's secure, it gives me better decision outcomes, it makes me more efficient to lower costs. All of a sudden, you're talking all these things that a CFO likes to hear, right? And they can prove it based on their product. So they talk about all the different connectors they have and what they're able to do in SAP, the key features, and then just wanted to go to the actual cost savings here. And this is a good workflow. If you're more technical, this breaks it down in English of, okay, we're going to understand data required for the workflows and analysis. We're going to extract the data from what you have in your ERP and CRM. We're going to harmonize it together on the platform, integrate the data to offer all the end users in your different departments and business have in a readable, digestible format. End users analyze and operation the data for value generation and decision making. So instead of going from months and years, now to hours and days. That's what you're paying for. And Chris, you explained it, right? You lived that.
The other thing is when it comes to a lot of these ERPs and everything else, even though sometimes we'd like to think that one enterprise operates one ERP, that's it's not really the case. So some companies, they have multiple ERPs depending on which department they have. Accounting could be running some different software. Another department could be doing another one. Another department has another thing. So everyone can have multiple ERPs. But here's the thing, when you have multiple ERPs, and let's say you're in C-suite now, you're looking at 3 different screens with 3 different things, and you're trying to operationalize a decision while looking at 3 different screens. That's not workable. You want everything to be consolidated into one. So that's the way that I would say, especially with companies that are always doing M&A, if you're, let's say, taking over another company and they have a different ERP suite, what are you going to do? Tomorrow morning, have them change their ERP suite, spend all this money to change everything out? No, you're going to have to figure out a way to integrate what they're already doing, what you're already doing, put it together, and eventually when the costs become a little bit more manageable, you can have them change to another to the ERP that you want them to change to, right? So it's almost like, hey, this is the bridge between not just 1 or 2 different things, but like a whole bunch of different things, combine them together and be able to make decisions. So I would say the benefit of this is you don't need 3 screens anymore. You just need 1 screen where you log in. You have one thing that you're working in, one desktop that shows you all the information, not the BS thing that we have to do right now, which is have data here from all your historical stuff and then log into another product that shows you what you can do, another product where you're actually putting in orders. No, now everything is consolidated, 1 screen, go right into what you need to do to make that decision, approve, reject, done.
Yeah, actually, Chris, your point, just to piggyback on it, it's actually more true than people would think, because that part where you were saying with the acquisition or merger, like I lived that 3 times. And the thing is, when it comes up to the C-suite part, when you actually use multiple systems, right? What they actually want, like they're not looking at the screen for any ERP, right? They're getting these reports, and there's massive like teams of people that sit on each ERP and actually pull these reports. And then there's another team that sits there and consolidates this and moves it up the stream. So that's like, it's more true than ever, really. But then something like HyperAuto, actually, instead of them saying, let's move on to one or streamline the ERP, or let's not do, they don't have to do any of that. They could just onboard HyperAuto, and they can completely stay existing the way they are, and then they can run everything through HyperAuto. So even if they're of the type to not want to do anything to change, you can still onboard this thing, and it'll collate pretty much everything and then move it upstream the way it needs to be, like more efficiently.
And you can see it right on the screen right now. You're looking at SAP Business Suite. You see third-party applications. You see Oracle. There are probably 3 different companies with 3 different codes out there, right? no one wants to have 3 windows open at the same time trying to make a decision. We want to just look at everything in one screen, make a decision.
I was going to get to that. Let's hold on. Jake, I know you were trying to say something. I want to hear your parts on HyperAuto, and then we're going to talk about what's on my screen here.
No, yeah. I was just thinking, just imagining myself at work. I mean, like, I don't know how many times I've had several different enterprise software programs up, and I'm at a very low level technically. I'm on the ground trying to, identify like fire safety deficiencies. But when I want to record that in something, or I want to submit a work order in this program and pull it up here and somehow communicate that to other departments, yeah, I've got so many tabs open. I'm talking to a lot of different people, just to do very simple things, and to see something that can, pull it together is is really, really interesting.
Yeah, this is it. Like you described it, Chris. Like, this is from their deck, from their white paper. And this is every company. Like, you look here, okay, I got my Excel files, I got my SAP, got my Oracle, got my third-party apps, which is tons, especially if they're SaaS-based. And then I got decision-making all in these little silos that no one's talking, no one's communicating in through the organization. So projects and decisions are getting made, and then outcomes are not being made actual to what needs to happen. And everyone's looking at each other and thinking, why didn't we get the outcome we wanted, right? But if you operate off of a platform that ties everything together so everyone can see the digital twin and the predictive outcomes and communicate, I would have to imagine this improves corporate communication heavily on all levels, right? So it literally makes the decision process more effective. And then I just wanted to share quickly before we jump to a new topic of just case studies, right? Not every company wants to actually be named because they want that competitive advantage as long as their competitors don't use Palantir. It says here, a Fortune 100 consumer goods company deployed Palantir platforms to quickly respond to COVID-related disruptions. Within days, Palantir software harmonized more than 7 legacy ERP systems into a unified environment. Using an out-of-the-box application, teams immediately began to optimize cost of goods sold and production, resulting in tens of millions of estimated annual savings. Like, it's crazy, right? You're not getting a Microsoft product. You're not getting a Google product that does it like that quick, right? And then you can see another one, 300 ERP data sets saving $57 million in working capital. The list goes on and on. There's a whole bunch of these examples. And then they actually just announced, this probably is where we can wrap it up. You can build your own product on top of Foundry, right? That's what makes it so nice, is that you know what you need in your developers if you're a large enterprise. But if you can bring all the data in to make that app more effective, or a super app, you look at what they did with Airbus and Skywise and the millions of dollars. I mean, Skywise is now an industry standard product across airlines, right? You now look at what they're doing with Wejo. You look at what they're doing with this new one here is called Athenia. That is going to be the project name or the platform software on Foundry for all of the shipyards in South Korea to improve the supply chain process completely. And they actually want to create by 2030 a smart supply chain shipyard to automate all these processes so we don't have this type of issue again. And so that's just one example. They also have some different ones on the actually, I might be, let me just make sure I'm not, okay, I'm mixing up the Merck one. Yeah. Sorry.
I was about to say, I was like, Athenia, I think is the Merck Germany semiconductor thing, not that the other one is the Hyundai one.
There's so many ones, but okay. So I got too confused, and see, mistakes happen, people, if you're watching. So with Merck is the one with the semiconductor supply chains with Athenia to fix the supply chain issues around semiconductors, and that's what they're working on. But it's a product on Foundry for semiconductor supply chain. And then the smart shipyards, I don't know if I got the, yeah, here we go. Future of Shipyard. It's called Future of Shipyard. They're basically going to do it with Hyundai, and they want a smart shipyard by 2030. They already, what was interesting too is, I know we don't see net revenue expansion rates when everyone wants to see what the NRR is for Palantir. But look at what you see here is that this is another example of a current customer expanding in money and contracts. So Doosan Infrastructure, Infracore, it was already a customer of Palantir's in 2019. We saw the case study, they're saving millions of dollars. Then they go up to their parent company, and now they're with looking at different departments and now doing different projects. That just shows you the flexibility and the scale that you guys talked about earlier. And customers are saying, okay, here's more millions of dollars. I want better decisions here on this part of my business or this, sector. So that gives me a lot of confidence. Even, we're sitting at $16 a share, but it's a long hold for me. It's definitely by far my number one spot as far as stocks.
Yeah, Dom, actually, like those two things right there. I think those are I reviewed them recently, like the what's it called? Athenia one I looked at just not too long ago. It's funny because if you just break that down, you're like, again, this clearly shows that most people, sorry, okay, no, this clearly shows that most people are like looking at it the wrong way, right? This isn't going to be like this hyperscaling growth product, right? Because if you look at the partnerships they're doing, it's a semiconductor arm of like a huge multinational company, and then like a shipping company that does both of them equally important in terms of supply chain. But the thing is, both of these softwares will like the impact long term is unheard of. Part of the problem that I think what people can't wrap their head around is Microsoft, Oracle, all these like SAP. Why do you think people don't understand why they make their money? Half of the reason they make their money is because teams at certain companies just don't want to move the data out. That process of moving the data out is actually like a really underrated, valued, under talked about, whatever you want to call it, issue. I'm telling you, like most of the places I've been at, they're like, oh, unfortunately, we're using Salesforce. Well, why don't you just use something else? Oh no, then we have to
Too
hire
hard.
like 6 new people. Yeah, exactly. Oh, and like, why don't you do it then? And it's like, okay, right? You know what I mean? It's like there's the problem. It's more like, don't worry about it. It works, whatever, right? So people
It's
aren't
good
looking
enough.
for that. Yeah, they're not looking for that extra efficiency until they see it. Then it's going to be like a floodgate, right? So this isn't something where it's a aha moment. It's more so like a slow bleed, and then boom, all of a sudden people will start jumping into these things, right? Because one, they don't have to switch. You can be agnostic. They can just totally go to it and still be efficient. Two, once they finally figure out that Palantir has a method to actually extract their data if they so wanted to, they can work with your external data source, but they can also pull it out and move it into their own system, whatever the case is, right? Once they figure out that they can do that, this whole problem of, oh, we're only paying SAP because we have to keep our data there and we don't want to move it, because we spent 6 months onboarding the software, right? So it's very, yeah, anyway, but it's like a long term thing.
Okay, there's one more point that I want Jake to talk about on Palantir. I know we were going to switch topics, but I think this kind of really brings everything home. Um, with how they are getting into all these different industries and their business model, 40 different industries, right? And their business model, I want you to walk users through this business model because it's so unique opposed to any other SaaS-based company. And Shabari just hit the nail on the head as you won't see the full residual until years and years to come of what true exponential impact this will have for the margins and the revenues. Can you explain the acquire, expand, and scale fit model that they have, and what makes that so unique?
Yeah. Oh man, I wish I had those definitions in front of me because they define acquire, expand, and scale in their 10Qs, in their annual quarterly filings. And acquire basically means that um, man, I think it's they've recognized revenue, but they have not been.
At certain
Uh,
thresholds. So
yeah, so,
yeah,
positive contribution margin.
yeah,
They haven't reached positive contribution margin, and then expand is positive contribution margin, but it's under a certain cap, like $100,000, and
that's
then
exactly right.
scale is anything beyond that. And what they've shown quarter over quarter is that the time from acquire to that next expand to the next scale is shortening. It's getting compressed. But the curve on the end of it keeps growing. As you can see from their top 20 customers, every quarter, it's like 2 more million from the average of their top 20. And it's just this stair step up. And if that's an indicator, these large companies that, they need things to work. Some of them, they're very technologically literate. Like when I was very surprised by their acquisition of John Deere as a customer, because they're no Luddite. That is a really forward thinking company. And if these large Fortune 500 companies and customers keep scaling like this, that's a really good indicator for what the long tail is for all of these others that they're acquiring. They're gonna, I mean, if they can, and the big question is acquiring more customers. It's that sales team. It's giving the right pitch. It's embracing that new atmosphere of mix between sales and the engineers, that new culture. If they can do that,
What did you say their commercial growth was? I think you gave us a number just recently.
their U.S. commercial growth for, I have it here. Let me
You said
read
it was close to almost 100% year over year, right?
Yeah, U.S. commercial growth in Q4 of 20 was 107%, 72% in Q1 2021, 90% in Q2 2021, and Q3 was 103%.
So they're
Yeah.
doing it, right? They're doing it.
Yeah.
So what
Yeah.
we all four measure here, this company on that piece. So do we think they're only going to do 30% revenue growth for the next 5 years?
No way.
Conservatively, that's that's probably the baseline that they set themselves
That's
up.
the
because they
bottom
have
of
to
the
say
barrel of
something.
what I'm calling here. And you can write on your YouTube channel, on my channel, if I'm crazy or my prediction is trash. That's fine. It's all good. The beauty of investing is it's personal, right? If you don't like it, short the stock, sell the stock. But what I'm telling you with this business model and what Jake just explained to us is that there is no other company willing to lose money for the first two parts of that customer interaction with the acquire and scale phase, because their product is so good that they know they will make up all of that money and margin tenfold on the scale phase.
I think the only reason why that they've set themselves at 30% is because you have to take into consideration that a good chunk of their revenue right now is still coming from the government, right? That business, unfortunately, the way that it works is that it's like a feast or a famine sometimes, where when you're working with the government, if you get a huge contract, you land a huge contract like the Army Vantage one, it's $800 million contract, but you may not see that kind of contract for another 6 months, right? So the thing is, if you start to recognize revenue too quickly, that what happens is the follow-up year you may not recognize, and now you get something called you have like lumpy effects, where now you're kind of like seeing lumpiness in quarter to quarter. So instead it's like, hey, listen, we know on a base level we can grow at 30%, even if there's one quarter where the government sector does not give us a ton of contracts. And that typically happens in Q3 because that's when the budgeting happens in the military side. So I think that I don't want to say not hyper growth that we saw in Q3, but we saw in Q1 and Q2 is probably directly related to some of those effects. I can tell you based on a lot of the research I'm doing on the government side, because I'm interested to see what kind of revenue to expect. They're going to be generating a lot of money. It's not just, I think a lot of times we think that, we're all excited about the commercial side, but even among the government side, they're doing really, really well. They're integrating with all sorts of things. The technology that they have is on the cutting edge of anything that's out there. And the military, I'm former Army. I can tell you right now, there are so many use cases that have gone unfulfilled for a long time, because the way that contractors worked back in the day was they would come to you with a proposal, right? And they say, well, you know what, we can do this for you. And so they would allocate $1 billion to it, and then they would build a product. But guess what? If they were done early, it wasn't like they're going to give you any money back. If anything, it was in your interest to extend out that contract, because then you could say, well, we said it was going to cost $1 billion, but it's actually going to cost 2. So then they go and they get the money because they don't want a half finished product. They put another $1 billion. Palantir said, screw that nonsense. We're going to create a product and we'll sell you the product, right? Right now, all these other defense contractors have been making money off of the government that way. Trust me, they are not happy. They are not happy at all. But at the end of the day, guess what? If Palantir can provide a service that's really good, that that they don't have to pay for, it saves the taxpayers money. I think we have a lot to see Palantir, but I think don't underestimate the growth in Gotham. Yes, there may be times where quarter over quarter you may not see as much growth because of the way that the military contracting structure works, and sometimes politics can also get involved in there. But overall, I think 30% is a bare minimum. I think we're definitely going to see more than 30%.
And just to close the Palantir discussion, just for all those out there saying, well, they're not profitable, I understand their stock-based compensation upsets you, but they are free cash flow positive, and they are doubling that for the last 3 quarters. So if they really cared about being profitable, they could turn it on like that. So if you're a long-term holder, you really want them focused on keeping the talent there, executing to the customer growth, and keep innovating. Because if we think that they're only going to just have Apollo, Gotham, and Foundry for the next 20 years, I highly doubt that, right? They're going to innovate other things. So on to our last final stage, because I know it is getting late here for the East Coast guys. Just want to talk about founder-led leadership and company culture. We've all worked at different companies. I just think this is not talked about enough on YouTube or FinTwit. Chris, before we started recording, you made some great comments about investing in the future and investing in people. And I'd like everyone to kind of go around the room. We'll start with you, Chris, on just why that's so important, and how I think here we all believe there's intangibles when you invest in a person and a culture that can almost be sustainable much longer than numbers and things that you can, it's hard to grasp the impact. So Chris, just kind of say what you were talking about earlier.
The way that I would pose this is, when you look at a company and you look at the leader that's on top, right? That leader is going to set the vision. Basically, a CEO's job is to set a vision and then figure out how to hire people and put them into the places that they need to be. When you have certain CEOs, and certain CEOs, you would think that some of the stuff that they do is just pure luck. I can tell you right now that there's no such thing as pure luck. I'll give you an example of someone that I recently started reading about, Eric Yuan from Zoom. A lot of people just say, well, you know what, he's the CEO of Zoom. But guess what? When you look back at his history, he was also one of the people that helped develop WebEx that then Cisco ended up buying, right? So then when he was at Cisco, he saw that, Cisco was not living up to the vision he had for the product that he originally wanted the consumer to have, right? That made consumers happy. And that was WebEx. If Cisco's culture was good, he would have stayed there. But he saw that there were a lot of deficiencies in the culture. So guess what he did? He moved out to found another company. And that was Zoom. He took some of the other talent who also recognized that Cisco was not doing enough to develop the product. And so when he moved out, it's like, no, I'm going to build the thing that I have that vision for. And you can see a lot of companies that are founder led. Steve Jobs, right? Steve Jobs had a vision. He wanted to keep that vision. Once he got pushed out of it, that vision just went all over the place. So that's the thing that I think a lot of times I want to see. When I see a CEO at the helm whose personal vision gets kind of like put into action, I think that company has a large amount of growth to go. I think companies that you see CEOs constantly changing, the turnaround CEOs, it's hard to turn things around. I think it's better off that you find someone, especially a founder-led company, that there is a clear person at the top who's got a vision, or has people under him that can eventually take up that spot. And just like how Tim Cook did with Steve Jobs. So I think right now, when I look at a company, one of the first things I do before reading their balance sheet, before reading their 10Qs, what their business model is, all that stuff, first thing I say, okay, what kind of leader do they have? Is it a leader that people want to follow? Is it a leader that understands the importance of the technology or the product that they're trying to push out into the world? Someone who's got personal stake in this outside of just the monetary gain. Because at the end of the day, your reputation's there, right? At the end of the day, if Apple ended up being a BS company, Steve Jobs, no one would know who Steve Jobs was. He was just another CEO, right? So that right there gives me confidence. So when I see a company that's founder led, I'm all about it. I'm like, yeah, that's like one of the things that is on my checklist. If it's founder led, it's getting some points because of that.
So Shabari, I think all great points there, Chris. I think we all agree with that, and encourage people to look for those kind of leaders. On kind of the flip side there, talking about the holistic team, you made some comments earlier about I only really started investing in companies that I wanted to work for. How do you look for those company cultures, and what you would say I want to work for, and this is why I want to invest, or I feel that their employees are happy? How do you do that?
Yeah, fair enough. Good question. I think, well, so all the stuff that Chris is talking about totally resonates. It's, the founder-led stuff, that's all there. Um, to answer your question directly, Dom, there's literally one easy way to see if, and especially for if you're looking for a software SaaS company, engineering is like the foundry of like the entire SaaS company, right? It's like the fab, no pun intended, of course, but it's like the fab of like of that entire company moving forward. So I'm going to be a little bit of a contrarian here. Most of the time, like 90% of the time, engineers could give a crap about leadership. Honestly, like no matter how visionary you are, we generally don't care. Just because you get so deep into the work, especially if you're quite passionate, you get deep into the work and stuff. But at the same time, you can tell, because engineering culture is kind of a weird, quirky thing. Everyone has their different ways of going about it, but at the end of the day, the really good ones, like the people that really want to get things done, they want to reach a level of efficiency that is, to be honest, not really achievable. But there's a certain ambition, there's a certain push, and really, like sometimes there is no 9 to 5 half the time when you do stuff like that, right? You can go like for example, like I literally just burnt the midnight oil last night, right? You get pretty passionate about it. So what happens is when you find a leadership that encourages that, but not in a way that's like, yeah, man, work another 14-hour shift, it's more so like, oh, you work that, why don't you have a day in lieu? Or why don't you like, because a lot of startups, I mean, try to emulate this, right? They're like, oh, we have free lunches and ping pong tables and stuff, right? That's all great, but what is that really doing from a ambition perspective, right? That's at this point, I'm calling it a break. I'm not calling it something that makes me want to stay. But Palantir, Tesla, all these companies, right? They pride themselves on hard work. They might also have ping pong tables and free lunches and stuff, right? But that's not there as a thing to basically pull people in. It's more there as a, hey, I know you're working hard. Here you go, man. Free lunches. Why don't you go have a break at a ping pong table? Why don't you get free tea from the tea bot or whatever? You know what I mean? It's not there as an incentive. It's more there as a support system, and that kind of way of going about it is very clear. I'll give you a quick way to look at it. Every company pushes out these culture videos, right? And I did all the stuff we talked about. I did like reviews on it on my channel if you guys want to see it. But the easiest way to look at any culture video is look at it, look at the engineers that talk about it. If they talk about culture, most of the time it's probably bad. If they talk about the work and what they're doing, it's probably someplace you want to be at. Because the thing is, we don't care that much about culture as people think we do, right? I know it's been this whole startup thing and there's shows around it and stuff where everyone's just like playing ping pong. We're actually mostly at our desk. Like half the tables and free lunches don't get eaten. Okay, I'm just being straight up, right? So like in a culture like that, when you're asked to sit in front of a camera, which most engineers don't like, we're a very sort of introverted group of people, right? So when you're asked to sit in front of a camera, why would you do that and talk about like something that you really care? Like if you talk about something you're actually doing and you're ambitious about, usually it's a fantastic sign that the company is doing the right thing. there's like a lot of videos where you can look at it and they're all like, yeah, it's great, the culture is great, we did archery tag, we did axe throwing. Like, who gives a crap? Like, you know what I mean? Like, what does that say about anything? So that's my indicator.
No, I love the honesty. I love the perspective because I work with engineers in
Yeah,
different departments, and a lot of what you speak is true.
man,
Um,
it's
Jake, kind of just bring us home on this whole idea of company culture and people. When we invest in a company, we're investing in people, right? We're investing more in something that we believe finite can go further and grow, and that's why we're giving our hard-earned dollars for them. So just kind of just tell us how your thoughts on company culture and leadership.
Yeah, I think first and foremost is the mission that the leadership puts forward. Um, uh, Chris, you're in the Army, so you might be able to identify with from commander to commander. If they came in and they said, I want to do X, Y, and Z, I want to improve in this area, and I think we can do it, and it's a worthy endeavor, and motivates people to come in,
Yeah.
you will put in the extra hours.
Yeah.
And the opposite is true of a bad commander. I
Yeah.
think the same is true in business. If you have a charismatic leader who is all in on their product, their company, and their mission, and they can communicate that. Um, uh, Shabar, like you said, like it's all these nice to haves that are secondary. It's that, like, in the military, it's like, oh, that's like the mandatory fun that I don't want to do.
Yeah.
I want to go get the job done. And so when I see a company that has a leader that's communicating that vision, um, and motivating the troops, it's like, oh, that's a diamond in the rough. I want to invest in that company and that leader. And I think uh, something I've said before is kind of like, value investors invest in companies based on their past performance, um, because they expect future returns, and growth investors invest in leaders based on their past performance and their ability to give future returns. So I mean, that's first and foremost what I look at: the mission and the person giving that mission.
Yeah, I agree with you. I mean, I've dealt with commanders who come in, they're so gung ho. They're like, we're going to be PT studs. We're going to do the craziest amount of PT to get to a point where our numbers are so high, and we all know, like, dude, you're doing it because you want to look good, right? And you want us to do it. Not the, hey, listen, guys, let's get together as a team. Let's figure out what we're going to do. The commanders all give you stupid reasons why things are supposed to be done without understanding that, hey, it's not as easy as you think. So I think a lot of times the NCOs, I had great NCO colleagues that were NCOs that I worked with that were the backbone of things, and they did not, a good leader, especially a good officer that knew his NCOs, gave them the autonomy to do the job, believed in them, but gave them that clear mission to say, hey, listen, this is what we're going to do. You guys are going to implement this, right? But I'm going to leave some of that autonomy to you. When you have like a micromanaging captain come in of a company and just dictate what's going to happen, like based on results that he wants, anyone that starts off with I want results is never going to get results, or at least the results that you're going to get are so artificial that literally it'll last for maybe like 60 days. The greatest leaders that I've ever had, they came in, they said, look, this is what I'm here for. I'm here to take care of you guys. I'm here to do a mission that I was appointed for. We're going to get to a position where we're all comfortable, we're all happy. If you guys need anything from me, talk to your NCO. Your NCO will talk to me, and we'll get it done. We'll get you guys squared away. We're not the best. The best officers that I've ever worked with are ones that are formerly NCOs. Those are the best ones that I've ever had. I don't know about your experience with that.
Yeah, prior enlisted, that's definitely the best.
Yep.
They've been down there and done what you're doing. Yeah, definitely.
Yeah.
So in the
Yep.
corporate world, I would say the similar fashion is there are leaders and then there are managers.
Yeah.
A leader, you will run through a brick wall through. You will work that 14-hour shift through. You will cover for them if something goes wrong with the team.
Mhm.
And you'll do it gladfully, and it won't feel like extra work. Managers, you're only going to get a finite amount of time from me, and I'm already looking for my next thing, right? I led a sales team for 4 years, learned through the hard knocks in the first year, ran it like an individual contributor, not realizing that everyone's different, right? Everyone in a team, you're not going to have all type A's. Let's go be the top sales team. You're going to have your B contributors and you want to get them to B plus. You're going to have your C and you're just trying to keep them there and get them motivated, get promoted. Then you have everyone else. You're just like, okay, who hired this person? And you have to get the most out of them. And that takes being a motivator and as you said, Chris, giving them the autonomy to own the result. And I think we can all agree when we saw the Palantir culture videos and then we watched videos from Tesla, NVIDIA has put out some excellent videos on that. Those are the companies also you want to work for because that's a culture you believe in. Like, hey, they're making it to where people want to stay there, you know? And then you can go back and look at Glassdoor. You can look at other things to see the company, you know, ratings and culture and how they stack in Forbes. And all of those things can help you if you do the homework to understand they have the people, they have the vision. Now we got to go check all the other boxes. But for, I think all of us, we look at that first because if I wouldn't go work for the guy, then why do I want to invest and give him my hard earned money? Right? Like we know how hard it is to make a dollar out here. And so we're trying to invest for our families to better. That's the outcome we're looking for investing in the stock market is there's no other place that you can put a dollar and see it grow as fast as it can be and beat professionals at this game just because we're willing to be patient and wait longer and not operate on quarters as Chris you said earlier. Well, this has all been great. I want to make sure you guys are able to plug any channels, Twitter feeds. So we'll just go round table. Chris, if you want to plug your Twitter and any YouTube channels or anything else you got going.
Yeah, for now I'm just doing a Twitter thing. Eventually I'm gonna start to do a quick I'm thinking of just doing podcasts with other YouTubers interested in the same space. I was telling you guys, I'd like to put a camera in front of my face and tell you what's going on, but I don't think that that's something that I like. I actually like having one-on-one and like this group conversation. So maybe that's something that I'll do in the future. But for now, if you guys want to just check out some of the research that I do, just follow me on Twitter, and that's Chris Patel 99 on Twitter.
Awesome. Shabari?
Oh, it's same thing. My Twitter is more like both my Twitter and my YouTube is really just an extension of my personality. So YouTube is just CyberFam. Twitter is at OG CyberFam. But yeah, feel free to follow me. More importantly, I would just recommend everyone just do their own research, do your own homework as best as possible, and then feel free to check out my content if you feel like it helps, and any of our contents. But do your research first.
Jake?
Yeah, I'm on Twitter and YouTube. Jake Yuri. Yuri's YURRI. But yeah, been kind of inactive lately, but I'll start ramping up more when I get settled into the new house. So
yeah, and I'll definitely say you guys, if you want to do your own homework, you want to research and understand stocks, follow these three gents on Twitter and their YouTube channels. They do excellent work on research. They're passionate about this. Hopefully through this video, you've seen how much we like to talk stocks. We could just talk for hours on it, and we'll do this again for sure. But please do check out their channels. It helps them further and deliver more content for you guys. And really, we do this because we enjoy it and we want to help others. We're not saying we're gurus or financial experts, but there's some fundamental truths in the stock market we've all witnessed, and we've seen great returns from others and what we've seen so far for ourselves. And so we encourage you guys, if you want to better your financial situation, obviously get your personal financial piece, in check, but the stock market you can win in and you can dominate your investments. And I would start with doing your own homework, but really appreciate the time, guys. This was fun. I want to do this again, and thank you for all the viewers who have supported the channel and podcasts, and we'll do it again soon.